And we are live. It is Layer1Live. What's going on, everybody? Welcome into the channel. Welcome into the community. What a time to be launching Layer1Live as we are about to break 11K. Maybe. We'll see what happens. We'll see what Dimitri has to say. Bitcoin is up. It looks like 9% on the 24-hour chart. We've got a good amount of news. A ton of things that are new to the channel, guys. Obviously, we just released that blog article about the LADS token. I'll drop that in the chat here shortly. But we have a ton of different things. I actually have a second monitor now, so I'm gonna try to work with that. We'll see, how that works, and bear with us if we have any issues there. But my man, Dimitri, what's going on today?
Yeah, man. So congratulations on your purchase. Yeah, as you can see, I'm in the lounge right now. I had an amazing weekend. I hit the lake, spent some time with the nature. So had some relaxed time as the market was kind of pumping around. So yeah, definitely volatility is here. BTC is nice to see BTC move. I might have to ask you to rename my tag from Ukrainian bear because that's not gonna go well with my.
You the bull now?
No, I'm not the bull, but I'm definitely not the bear right now. So,
Gotcha.
But yeah, we definitely, gonna jump into that and talk more in detail on the desk tomorrow. Excited for that, but we definitely gonna talk a little bit about the fundamentals. We have interesting stuff on the docket here as far as the news goes. We had interesting things that were released. So I'm excited to dig into the banks and the Visa stuff. We have tons of things that are going on, and we can see obviously BTC is kind of reflecting some of that, some of those good news there. So
yeah, a lot of bullish news as it comes to kind of the bigger regulatory concerns that have kind of plagued Bitcoin for a long time. A lot of that is kind of opening up to us, and we'll check here in a second. But we've got Pablo in the chat. He says, hello all. What's going on, Pablo? Welcome into Layer1Live. Welcome into everybody who is having themselves hopefully a good Monday. We've got some team news to get to. Obviously, we dropped the LADS token. We just literally 2 seconds ago posted the LADS token primer. If you guys, I know we were having trouble posting the actual link in the YouTube comments. So if you go to our Twitter at Layer1Pod, you can go ahead and look at that primer. I'll pull it up here and we can kind of take a look. Let's see if we can't get in here. All right, so I've got the LADS token primer here. Basically, guys, we've talked about this. So there's a ton of links to the reason why we launched, why we're working with Roll, all this good stuff. But the best part of the news is going to be that token distribution, how you're winning it, and things like that. So I'll let Dimitri touch on some of this, but before we get to him, how do I get LADS? That's basically what you guys want to know. We're talking about LADS utility. So the only way you're going to be able to obtain LADS initially is through earning the token. That's going to be attending Layer1Live. That's going to be commenting on YouTube. It's going to be engaging with live sessions, Twitter bounties, Telegram activity. There's going to be so much more things that we actually introduce over time. So if you want to be able to earn LADS as we go along, you definitely want to get in our community Telegram, as well as follow us on Twitter. When will LADS be released? We've got that today. So obviously we have the token that's set up. It was minted just this past week, and we're launching it today, 7/27. Dima, do you want to hit some of this total supply? Do you got to pull it up on your screen?
Yeah, actually, I don't have it pulled up. It caught me off guard there.
No worries. So, but while Dimitri's pulling up the total supply and initial supply, we'll touch on that utility. Guys, the reason why we're starting this token was because we liked everything that Roll was doing as far as social money is concerned. They're definitely doing the right things as far as community engagement, and that's basically what the LADS token is going to be, right? It's going to reward community members for engaging with Layer 1 content. Now, initially, you're just going to be able to earn it. We'll talk about things later on down the road, but initially this token is going to allow us to have leaderboards. It's going to allow us to reward the best members. It's going to give access to maybe different tiers of content. So Dimitri might have some exclusive content. We might do some exclusive NFT drops for LADS token holders only. In the future, there's definitely a potential for governance. There's definitely a potential for merchandise and online events that Layer 1's planning on hosting. So we've got a ton of good utility for the token right up now, and then we'll eventually get more utility as we go forward. And the last thing I'll say before I pass it on to Dima to talk numbers. We've got our first competition for lads that's going to come out. So the first ever drop of lads is going to revolve around this competition. We'll release a blog post here at the end of the day. We'll release it to our Telegram and our Twitter profile. Basically, what it's going to be is a competition around what the community thinks we can use lads for, because there's a ton of good minds in our group, and we want to know from the lads themselves, what can lads be used for. We'll pick probably the best 2 or 3, and we'll drop lads to those guys. So Dima, without further ado, what is the deal with the numbers, man? Hit me with it.
Yeah, so as far as the total supply goes, there's going to be 10 million lads in total. As far as the total supply goes, 12% of that is going to be for the liquidity providers, 68% to Layer 1 community rewards. That's going to be vested over time. Some more tokens are going to be unlocked that can be distributed to the community through the bounties and all the things that we just described, that Q described. And then 20% to Layer 1 team with 3-year vesting as well. So that's going to be held by us. And, of course, that can also, kind of benefit the community as well. So we can distribute some of that, maybe down the road too. But the overall breakdown is 12% liquidity providers, 68% as community rewards, and then 20% for the team. And then the initial supply, the way we break it down, just off the release, is the total initial supply is going to be 3.2 million. 38% goes to liquidity providers, 16% to Layer 1 community rewards, and 46% to Layer 1 team. So, this way, once we start getting more tokens unlocked, the community will have more access to basically complete bounties to claim those tokens, and more features we release. So, the initial breakdown is not as important as where we're heading, right?
Mm-hmm.
Because you might say, hey, listen, 46% is held by the team of Layer 1 in the beginning. Well, that's just the initial setup, because the goal is for the community to hold 68% or even more, right? Because we're using that as rewards to reward you guys with the token when you guys complete bounties and so on. So it's gonna be a fun, interesting setup. I'm excited for it.
Yeah, absolutely. And if you want to get more information on what basically you're going to have to do, I would head over to Roll, and I'll pull up TryRoll here for a second. But basically, TryRoll is going to have an app for you to kind of, and some of this is going to happen off-chain, some of it's going to happen on-chain on the Ethereum network. But basically, Roll is allowing you to have like a login, essentially, and you'll be able to have an off-chain wallet, which essentially will hold these lads. There's a ton of other creators in there, too. I think there's about 250 creators that they have at this moment. And they basically, you can earn different creators if you don't, if you want lads, but you can also, get a ton of the other tokens that are out there, and you can get them all in this wallet. You can eventually port those over to the Ethereum wallet so they're interoperable with other things. One thing we do want to touch on, I'll get to some of the comments here in a second because I like some of them, but put that link here, please. Yeah, Dimitri, if you can log into your YouTube maybe and drop some of those links. I don't know. They're looking for the lads primer, but something to touch on real quick, guys, before we go on with this lads token is this is not like an investment vehicle, right? Like we are in the U.S., right? We have to be on top of our stuff as far as letting you guys know that this is not like any investment type of advice. It's not we're not distributing it so that you can go 100x. We really want to do cool things with the lads token. Sometimes, living in the U.S. has its disadvantages. This is one of them. I think there's a lot of cool things that we could do with the lads token. Governance sounds like something that we could end up doing, but outside the US, and we'll touch on DAOs here in a second, there's a lot of cool things that you can do with tokens and the ability to set up these decentralized organizations where you can reward different people. We just have to be careful with how we do it since we're in the US, right? Maybe one day we'll be able to traverse freely through the DAO environment, but until then, we'll see what we can do. So leaderboards, community points, access to content, access to merchandise, access to events. These are all things that we want to do, and we want to get your feedback on what it could be used for too. So there's about 16 people in the chat. We appreciate you guys coming in. If this is your first time, this is Layer1Live, baby. We're We're bringing you the hottest news from the week. Dimitri gives you TA throughout the week if you're looking for price action. I've got that NFT live set up on Thursday, and then we do interviews throughout the week as well. So that's basically our setup here at Layer 1. We have a fantastic lads community. I see a lot of lads in the chat. Let's get to them here for a second. We got Pablo is talking about 2x the screens means 2 times the work. Yeah, kind of.
That is true.
Yeah, more money, more problems. Lee Moore Raz Cohen is saying, do you need a VPN to use LADs? No. So initially, this is going to be an off-chain token, right? It has interoperability with your Ethereum wallet, whatever you use, but you can use this as an off-chain, transaction. And LADs is, I believe, freely open to most people. Let us know if you have to use a VPN to access it, though, because we haven't heard about that. AdsCan2 is asking for the link. Did you end up sending him that link?
Mm-hmm. Yep. Yeah, I dropped it in chat.
Okay. It's not showing up on my end, but are you accessing it through Layer 1?
No, I'm accessing through my personal.
All right. Well, hey, ads, we'll try to figure out the best way to get that to you. I might be able to edit the description and you can refresh your browser. I'll let you know when that's going on. And Seth Graves is saying, hey, lads. What's going on, Seth? We appreciate your contribution. Speaking of contribution, before we get to the rest of the news, Kieran, you are our lad shout out of the week, man. Kieran's been one of our best lads since kind of the inception, and we appreciate his support as we continue to go forward, but also everything he's done up to this point. So we appreciate Kieran out there, man. I guess the next piece of news before I get to stats and then we start up and Dimitri takes over is going to be the Bitcoin stakes. So if you guys don't know, we do a Bitcoin prediction stakes every Friday before Dimitri's desk at 5 p.m. We launch a Bitcoin prediction poll. The closest person to that number, so it's usually a range, so below 9K, above 10K, between 95 and 97.50. If you pick the correct range, you move up into the Bitcoin stakes, and at the end of the month, we pick who the farthest along is, and I've got the image right here. So you've got the Bitcoin stakes. I don't know if you guys can see that based on the image, but we have a bunch of horses. Tomas and Zach Lee were the winners last month, so they got new horses, and they got a little star next to their name to indicate that that they were the winners last week or last month. Bitcoin lads, you can win as you take part in this Bitcoin stakes, but also BTC. So we've got that Bitcoin prediction stakes. The only way to take part in the Bitcoin prediction stakes is joining our Telegram. So that's basically that. Congrats to no one this week because no one predicted that. Nobody predicted that the price would be above 10K. We ran that poll and no one picked above 10K. So that's pretty much it. Last thing I'll get to, stats. Top 5 countries this week: US, UK, Australia, Germany, Canada. Those are the top 5. We appreciate you guys. Top 3 episodes from this week. We had that episode with Jeremy Kaufman from Library talking about content distribution. We set up our little profile on Library as well. We had Galen, who's still pulling in the views, talking about DeFi and institutions. And then we have Stanny from Aave talking DeFi. So that's pretty much it. This week we got Dimitri's Desk Tuesday. Wednesday and Friday are TBD on the interviews, and then we have NFT Live and Dimitri's Desk. So, wow, ton of housekeeping. Yeah. We appreciate you guys hopping in the channel. Thank you for stopping by. If you haven't left a like yet, I don't know what you're doing. Leave a like right now. And if it's your first time, please subscribe. All right, Dimitri, take it away, man.
Boom. All right. So jumping into some breaking news really quick before we get into the quick news. Really, the breaking news here, as far as the price action goes on BTC, we obviously broke through 10K. And, once we broke through that, it escalated even quicker. I was talking about on the desk how, a lot of people would be shorting at the top of that range. So probably had a lot of stop losses in place for those short sellers. So bears got squeezed out. We had a little talk about the bears and in our chat on Telegram, how, they're basically kind of like bad or whatever, but I try to defend the bears. They're like very good species that need to be preserved in the market because they provide, functionality and so on. So for example, this one, where bears were shorting, at the top of the range of 10K, they got squeezed out and we had that big pop in volatility. So, if we didn't have maybe that many of short sellers, maybe the pop would be, muted or less volatile. In this case, we carried all the way, just peaked at 11K and now, chilling around 10.8K. So price action, we definitely want to see, BTC moving, right? We've been sitting here waiting for the next directional move, and that, finally that might be it. So that's just the breaking news as far as the price action goes. The second piece of breaking news, we got Ethereum 2.0 Launchpad goes live. So went live. Basically validators can now test out the staking mechanism and how the whole system is going to work with staking. So it's still a test net, obviously, but they're seeing quite a bit of success already where a lot of people are moving ETH into that to test out the system and how it's going to be working. So ETH obviously has been doing pretty well recently as far as the price goes. Even though we did have a delay on ETH 2.0, but it looks like the devs are working hard in releasing these testnet launch pads, to kind of work on this and make sure it's bulletproof before they go live. So it's pretty good to see that for ETH. It looks like about 150,000 of ETH has already been deposited to the contract. That's waiting for the testnet launch this August 4th. So the testnet launch is going to be on August 4th. So that's going to be pretty good for for ETH.
Yeah, ETH 2.0 is interesting. We'll see when it launches. A lot of people are making those jokes. ETH 2020, ETH 2021 kind of when. But as far as Bitcoin goes and Bitcoin breaking 10K, I did want to get your kind of thought process here, because part of the thumbnail that we have kind of sitting on YouTube right now is this a DeFi sell-off, and how that kind of flow of money is going. Did you plan on talking about that later, or do you want to get into it now?
Yeah, so I didn't want to spoil the Dimitri's desk for tomorrow, but I can't obviously resist, right? So I'm gonna have to say something.
Yeah.
So yeah, absolutely. It's like I've talked about the capital cycles, right? So we, where we saw BTC dominance falling, people rotating to riskier tokens. They got into alts. We saw alts rally. We saw DeFi tokens rally. But now where we start seeing DeFi tokens start to come down, we saw some alts are still performing well. ETH was outperforming, but now we also saw that altcoins start to drop while ETH was still coming up, and now we're seeing ETH is kind of steady while BTC is rising. So you have the capital rotation all the way out of DeFi, out of alts, into ETH, into BTC. And then the question is, will that rotation continue into fiat? Because that's the typical cycle of risk that we observe. So it was interesting to see BTC dominance obviously went up by quite a bit. Compared to we look at the alt market cap to see if there's a deviation there between if BTC dominance is rising and alt market cap dropping, which signals the end of alt season. So this is something that's very interesting. It's happening that you have to be careful about, right? So if we do get a broad risk off environment, where people are rotating, cycling that capital back into BTC and perhaps maybe out of BTC into fiat, because the prices have gone so high, we might get a retracement in just broad markets overall. Also, just to add really quick, dollar has been dumping like crazy, so that also contributes to the fact that BTC is rising, because BTC is quoted in dollars, right? If dollar falls and BTC kind of stays the same, let's say, then it technically goes up, right? As far as the chart goes. So yeah, dollar has been struggling. It's been dumping, so also contributed to this pop in BTC.
Yeah, I don't have any stats up for the dollar, but I definitely have CoinGecko up here, and I'm going through kind of the top 100 by market cap. Obviously, Bitcoin saw that big run up. Ethereum saw a huge run up, but I kind of highlighted there that a lot of these DeFi tokens, I mean, Land down 33%, man, over like the past 4 days. Chainlink is down 11%, but I think a little bit more over like a longer time period. Just like pretty much everything is getting rotated out of DeFi and into altcoins and then into Bitcoin, like you said. So what would make that investor not, after rotating like out of DeFi and seeing this drop and seeing for example, I'll give Lend and Aave a shot here, 33% drop. I already rotated. Maybe I did maybe I called the top. What makes me not get back into DeFi tokens at this point when there's a 33% sale?
You know, if you think about it this way, you think of like, okay, there was a 33% sell-off, but then again, if you look in the bigger scheme of things, right? If you, let's say, start from like July, we're still up 100%,
Mm.
right? Where we're trading now, we were up 200%, right? So, it's normal to see that. If the volatility is to the upside like this, then we should expect volatility to the downside the same way.
Mm.
That's what we've been talking about on Dimitri's desk, saying that, hey, listen, when the downtrend starts with these tokens, you have to be out of there quick, right? So the last episode that I did on how to avoid buying tops is that actually revolves around risk management. So you set your stops very, closer, where you don't tolerate big pullbacks, right? So, in this 30% pullback, if you are holding it, right, in this 30% pullback, then you're exposing your portfolio to a 30% drop. But
Mm-hmm.
if you got out, when it started pulling away like 5%, then hey, that is the price you paid, and you're fine. Your portfolio is not wrecked. So I think at this point where we're going through this consolidation, people taking profits, people getting out, right? Once that gets rebalanced, that trend might return back to the upside. But this is completely natural to see this.
Mm-hmm.
Things just don't go up all the time, right? There's
What?
corrections. Yeah, right. it's magic. But so like, again, it's something that you should not be thinking that, hey, this is destructive, right?
Mm-hmm.
Because a destructive move would be like 90%, like
Mm.
80%, right? That's something that's a systematic risk that can trickle down and actually spook a lot of investors and traders in DeFi, and they would signal that, hey, maybe the credit bubble is real and it's popping and so on, right? But right now, it's just normal consolidation that's going on right now, So I think it's just organic, and it's fine.
Yeah, before we move on to kind of the more quick news piece, the last thing I'll say about this is I wonder how the liquidity looks on a situation when you have DeFi tokens locked up in these different DeFi platforms, and you're kind of like trying to get out of these tokens all at once. I think you touched on that, but like if there is a move like we saw with Lend, and you have all of these tokens locked up, how do you get out of that? It's not like a traditional setup where you can just go to the exchange and get you can liquidate. It's a lot more complex when these dominoes start falling and you have all of this locked up in these different complex systems. I wonder how that looks. And then the only other thing I'd say is the people that got into, because a lot of people were accessing these DeFi tokens via Uniswap, via an ETH pair, maybe a DAI pair, who knows? But a lot of people probably went in on some of these DeFi tokens via the ETH pair and just got absolutely hammered, man. Because you saw that ETH run
Mm-hmm.
up and then DeFi tokens at the same time. It was like boom. Like if you got in like at the DeFi top, not saying that we can't come back and never have growth in that sector again. That I'm sure it'll happen relatively quickly. But if you kind of traded ETH for some of these DeFi tokens, you kind of got wrecked.
Yeah, exactly. So yeah, I mean, the liquidity piece is, absolutely right. There's when we have pullbacks like that, it really tests the liquidity available during those times, and that's something we talked about when we talked to Ave, and just DeFi people in
Mm-hmm.
general, is that when we have volatility in the world, is going to be is there going to be liquidity to get out and in easily, which kind of does contribute to the volatility itself. I don't think it was that brutal per se. Maybe this time it could have been way worse.
Mm-hmm.
Is in my mind, but yeah, it was very interesting. Also, you keep in mind that the more stuff gets locked, the more value gets locked in DeFi, the more of that gets out of the circulating supply, which means that it's really not that many people are actually moving the tokens around and trading. So it means that it's actually easier to have the price moved when you have most of the circulating supply, or a big amount of circulating supply actually locked, right?
Mm-hmm.
So it's an interesting concept to think about. This has been done, many times. If you look at proof of stake, where they were locking tokens, and the tokens were going up in price because nobody were selling them because the circulating supply was very low because everybody was staking them and locking them, right? And the problem here is that, in DeFi, I don't think there's penalties for, getting out of it, right? Like in proof of stake, where you had to lock in, let's say, and be there for 7 days or whatever the restrictions are, and you can only get out of staking, within whatever restriction is set. So, for DeFi, I don't know if that's available there. So, which makes it, where if things start coming down, people can pull that liquidity out, and you have the chart up right now in terms of locked value. We see that big number of 3 billion, but, that can disappear quickly if things start turning around, So there's really no penalties or lockups for these liquidity providers to stay and provide liquidity, right?
Yeah, absolutely. And I think, like as I had the DeFi Pulse chart up there, a couple of the main liquidity providers within the DeFi space right now, which is Yearn, which has a ridiculous run up over the past 2 weeks, and we'll get into that a little bit later, as well as I think Maker took the top spot. Let me pull this back up and see if I can do that.
Yeah, Maker did take the top spot, and that's something that I had in my DeFi segment there. Let's hop into quick news. We kind of got stuck on a break in here.
No worries. Let's hop into quick news. So you got the first couple pieces. Yep. Guys, if you did want to see, I know a couple people were asking about the LADS token. If you did want to see more about the LADS token, you can refresh your browser now. I dropped it in the description. It's right under those links to join Layer 1. You should be able to find the link there. So check it out.
All right. So yeah, let's hop into quick news. So we had a pretty interesting piece of news come out, on July 22nd. So, on Wednesday, we dropped basically about the banks in the US, and, basically talks about how, the regulators kind of give the green light to banks to be custodian for crypto, right? So, that the market obviously took it very well. And it's interesting to see, now that, hey, you can store your BTC or whatever crypto in, in the banks that we know. And, so we'll talk about it a little bit in the discussion. I'll give you my opinion about it. But it's definitely, something that provided quite a bit of bullish news, last week. If you take a look, this actually, JP Morgan Chase has been kind of front running that by working with Gemini and Coinbase, which is funny because we all know, Jamie Dimon said Bitcoin is a scam. Well, he's now providing custody solutions to hold that scam token. So here we are now, 2020.
You're telling me the taxi driver is now an Uber driver?
Yeah, exactly. Exactly. So we'll break that down more in discussion. But to move forward here, we also have another piece of news that goes hand in hand with the banking news. Is that Visa is advancing their approach to digital currency, which is, obviously Visa, the big, credit card processor. They're basically moving forward. They're working with Coinbase and Fold to set up the back end, and they obviously have tons of users. They have huge presence in the market, and they see the interest is there. So what they're going to be working on is integrating a way to easily spend crypto using Visa card, and also have merchants that will be able to accept Visa in some type of form or fashion. So it's very good news. Obviously, the card processors are seeing that they might be missing out on some market share if the crypto, continues to pick up. They obviously make quite a bit of money of fees right now, card processing, right? And they don't want to miss out on that market share. So Visa is hopping in hot. They're pushing and looking for integration, talking about security and all that stuff, But it's like, for us, it's like, man, really, you're gonna talk about security? Like, like we've been here in this industry for so long, we were like, they're only covering like all these default stuff for the regular retail people that don't even know about crypto. So, but overall, it's good news from Visa. I definitely want to see that. I want to talk about adoption, like
yeah. Yeah, Bitcoin cash back, and I think like Lolly's been a really successful company with their Bitcoin rebates, but like having a Visa card that's created by Fold or Coinbase or whatever have you, and that you can get maybe 4% back on your purchases, and that being in Bitcoin in your Coinbase wallet, phenomenal. So we'll see how that goes. I've got a little bit of quick news here that kind of piggybacks off what Dimitri was saying. Bitcoin is a form of money in DC federal court rules. So along with the bullish news that we got from the OCC, looks like a federal court in DC. And I'll read directly from the article here. In case of United States versus Harmon, Chief Judge Beryl A. Howell wrote that money is commonly a means of medium exchange, a method of payment, or store of value, and Bitcoin is these things. So that is huge news. Obviously, like I'm again reading from the article, it means that Bitcoin is going to be treated as money in the context of money transmission in the DC area. So definitely bullish as far as regulation goes. I don't know. I mean, how much of this actually how much of the price action that we've seen in the past week, do you think this just happens to be happenstance when it comes to us seeing like a $800, $900 move after these pieces of news? Do you think it indirectly kind of led to some of the price movement this week?
Yeah, kind of. But I think it more had to do with just the study that also came out about how many people actually own cryptocurrency in US, and also where it ranks globally, where other countries and their population, what's the percentage there of people that own cryptocurrency, and where it came from 2019 to 2020, and kind of the fundamental plays of where the global economics is as far as the inflation and economic things that are going on with countries that are struggling. So there's a lot of things that are fundamentally happening there, and which essentially pushes speculators to push the price higher, because you're essentially trying to bet on the fact that that demand is going to continue to rise for BTC, and you're trying to front run it, right? So I think these news, they're definitely good. Because they're showing that major players are recognizing that this thing is here to stay, and there's probably quite a bit of money that can be made, and so Visa would not be doing this if they did not think that there's money for them to be made on this, right? So there, and banks as well. We're going to talk about that again in discussions. I can't wait to get there. But so like. Banks also see a huge opportunity, right? So it's like all those things, are paired up together, and it's like they're all lined up, right? They're like, okay, we're gonna do this week, like we're gonna release all these news this week, and it was
got the longs ready for that. Yeah. I mean, a lot of this Bitcoin news and the positive news around Bitcoin regulation, I feel like is going to increase, albeit maybe not as like imminent or like as quickly as we saw like a back-to-back, hey, US banks can hold custody, which we'll get to here in a second, and also Visa, and also people recognize, or judges recognizing Bitcoin as a form of money transmission. This is all going to increase over time as we see the older generation move out of lawmaking posts, right? I think like as we see younger and younger people move in, because I don't know what the average age of people in Congress in the House of Representatives, but it's certainly a damn high number. So as we see more of that, I think it's only going to get more bullish for not only Bitcoin but like digital currencies. So big news there. We got some comments, but I'm going to touch on one last story here. We had Brian Armstrong, who was actually on, I believe, What Bitcoin Did with Peter McCormick. So this actually comes directly from that episode there. Basically, it looks like Peter asked him whether new services from Coinbase Analytics. Everyone's been hearing how Coinbase Analytics has been selling, or Coinbase is selling Coinbase Analytic data to the SEC, to the IRS, to the DEA. And basically, Peter McCormick said whether the new service was at odds with the ethos of crypto and Bitcoin. And to quote from the article, Armstrong said, "I'm a big supporter of privacy." And he also said the product supports Coinbase's core business of cryptocurrency trading, in as much as it builds goodwill with regulators by making them also clients. So essentially, as we break down that article, he gave two reasons. He said, one, they're going to go somewhere else, and 2, it's better to have them as clients than saying F off and trying to be at odds with them. So definitely interesting interview. I know Kat put in the Telegram community, our lads community. Apparently on YouTube, the hashtag that shows up as tags that Peter McCormick put said hashtag delete Bitcoin, I believe. Do you remember seeing that?
Yeah,
image?
delete Coinbase.
Yeah. Delete Coinbase. Yeah. So that was an interesting portion. But yeah, Peter McCormick does not. I mean, they're not frequent interviews, but he definitely has some hard-hitting interviews if you haven't seen what Bitcoin did. But yeah, man, Coinbase Analytics. Obviously selling data. The reasoning being we'd rather have them as clients than as enemies, and if they didn't get it from us, they'd get it from someone else. So
Right.
Brian Armstrong, good points there. I guess I can still not like you for doing it, but hey, no worries there.
Yeah,
So go ahead.
No, absolutely. Yeah, I mean, I completely agree with that. It's interesting to see, like, if you think about just the difference in terms of how the society kind of values also the privacy of financials and so on, right? The financial transparency. Actually, U.S. people are most like reluctant to it, so they don't like government kind of looking at their financials. But as far as the data goes, in terms of like collecting data on you to have targeted marketing and so on, right? That's fine. While in Europe, it's the other way around. Actually, in Europe, they don't care really much about the financial, surveillance, but they care more about the data and and targeting, collecting data for advertising, which kind of shows you two different sides, right? So. So I think like Europe would be like okay with it, right? They don't really care about it. But in the US, there might be some resistance there, and they're like, hey, listen, privacy, is an important thing for us as people. And then China, obviously, doesn't care about both.
Like they're like honestly, that goes past their mind. They don't even think about it. So,
right.
But anyways, we got Pablo in the chat. He's saying he no longer uses Coinbase. Scott's over here saying that was a good interview. So he actually listened to that Peter McCormick interview. Definitely, guys, if you want to discuss or talk about anything that we're talking about now as we move into discussion, we'd love to have you guys comment in the channel. We appreciate you guys following along right now. So looks like Ola Art's still talking, or I guess we missed this comment, but he's talking about DeFi. He's saying one word that comes to mind: manipulation. The whales hype it up to lure in the users, then they clean up and get out. So some good thoughts there on DeFi. He also said one good thing happening is that users are leaving centralized exchanges for DeFi. So that was a very serendipitous comment as we move to Coinbase. We will see how those two stand at odds as we go forward. So we've moved into discussion here, guys. If you want to follow along with all the articles that we're about to drop, because it's going to get a little abstract here as we move into DAOs. But if you want to follow along with what we're doing, links are in the description. We'll talk about those as we go along. So the first piece of discussion news, let me move over the column here. The first news is going to be Karma DAO. So basically a networking DAO or networking community that also has a token is launching. So this is going to be, and I'm going to pull up the article here. Basically what's happening here is tokens are launching, or a token is launching on a bell curve, and essentially membership in a networking community is going to be doled out via these tokens. And as more members join, and going along this bell curve thought, as more members join up to 2,000 members, it gets more expensive as you go along. And you can sell that to others as they kind of want to join. So if you're an early member and you join this kind of this collaborative DAO or networking DAO within the community, you can then kind of sell that membership off. But these memberships are in forms of tokens. I believe they worked with Roll. So two of the companies that we have had personal relationships with, which is Roll and Abridged, which we had James Duncan talking about how Abridged makes tools for DAOs. But basically what you have here, guys, is a DAO that is tokenizing membership. That's basically what's happening. And so you have that bell curve where you can get in early. You can choose to stay and just have that as a membership, or you can go ahead and whenever you want to quote unquote rage quit, I believe is the term within the DAO community right now, you can then sell that membership to someone who wants to join that networking community after you. So what do you think about that?
Yeah, it's interesting. I love the rage quit. But yeah, it's interesting. Obviously, the founder is going to be probably the first ones in the group.
Mm-hmm.
So they're probably going to get set up, and then from there on, the token is going to rise for each member that's going to be in. It'll be interesting to see, how much. It really depends how well this is going to do. It depends on the quality of members that it's going to attract, right?
Mm-hmm.
So if we get just people joining in hopes of speculation and selling that membership later on the greater value, that might undermine the quality of the talent that participates. So
Mm-hmm.
that's one thing that I would watch, is that, hey, is this really actually, like, the idea is great, like I love it, right? The membership, that VIP kind of setup, but it has to be high quality members there, because if the quality of those members is kind of low, right, then it becomes just a speculation vehicle at that point. And once the whole gig is done, that community can die, right? So I hope they focus on the quality of it, and best of luck to them. I think it's a great idea. If it succeeds, it can be an example of
Mm-hmm.
something that other participants can do with the maybe channels as well. So it's an interesting experiment.
Yeah, definitely. And we're going to touch on here in a second the launch of another DAO within the Polkadot community, specifically the Edgeware community, called BuilDAO. And the discussion piece I kind of wanted to have here was the ability for tokens and tokenization to create community and self-sustaining growth within like a small community economy, right?
Mm-hmm.
Like what we have here with this Karma DAO is essentially people are coming together and they're able to create, and I'll read directly from the goals of the DAO. The ultimate goal of the DAO is to have a self-sustaining and growing professional network that can share values of mutual help and generosity to others. With all the noise and lack of community alignment across Twitter and Telegram, Karma DAO aims to be a central place of alignment for value-added relationships and business networking. And we'll touch on BuilDAO here in the Edgeware community, but essentially what's happening here is the infrastructure has kind of been laid, and Abridged is using these tools that Karma and BuilDAO are using, but they're essentially being able to now have movement and have action and have all of these different kind of processes within a decentralized autonomous organization. Whereas everything else kind of without these tools is just, let's jump in a Discord community. Let's jump in a Telegram community. Now with a bridge, what you're able to do is have these community incentivized, organizations that everyone has a stake in, that everyone can take part in, that everyone benefits from. It's like it just makes sense, and it's a little bit fringy, and I use that term a lot as we kind of find ourselves in DeFi and in NFTs and all of these things. But I think you have to look at the core values of what's going on. That's essentially tokenizing value in a community organization, like that.
Yeah.
And now users have incentivized values within that kind of community. So this is not as interesting to me as maybe a BuilDAO that we'll get to, but it definitely, I mean, the fact that they're using a bridge, the fact that they're using Roll to tokenize in a bridge for DAO tools, it's just kind of growing, and you're showing kind of like the infrastructure has been laid. Where Roll didn't exist 6 months ago, Karma wouldn't have been able to exist in this format. A bridge building out their tools, infrastructure is being laid out so that decentralized autonomous organizations can thrive. But so do you think this is a little bit too fringe? Do you kind of look at this? I know there's a ton of people out there that look at this and like, what the heck is going on? Is this legitimate? People are. It sounds like a Ponzi scheme. I buy in a ticket to this kind of community, and then I can sell it for more to the next person. What do you make of kind of the involvements that are happening within kind of DAOs right now?
Yeah, I mean, so being the naturally Ukrainian bear, I like to look and be the devil's advocate and look and see from the other side, right? So
Mm-hmm.
yeah, absolutely, you're right. All those values and all those um, that you mentioned, um, you know, to the core, like, yeah, they can benefit and the overall community and the structure and everything. But the other side of it, right, if it doesn't work in that way, if it doesn't turn out to be that way,
Mm.
then it becomes a speculation vehicle. Then that's going to be undermine the whole kind of idea of it, right?
Mm.
And that's what I'm kind of afraid of, right? So, we want to. It's always when you try to put it down on paper, it sounds great and perfect, but when you put it into practice and the market kind of takes over, and then we see the results, right? So we're not gonna. We can speculate about how it's going to happen now. The intent is obviously very clear,
Mm.
but from now, it's just going to be interesting to see how that experiment is going to play out. With being released to the market, and if it goes in the way that you explained, which is wonderful, great. And like I mentioned, it could be used as an example for the future. If it doesn't go in that way, then we'll learn from it and
Mm.
and adapt and develop a better system that will continuously try to find that perfect scenario to deliver the values that you've explained for the DAO and organizations to incentivize and participate and run this thing as a machine. So it's interesting. We definitely see a lot of experiments in crypto, and a lot of the experiments that we've been having in crypto, turn out to be eventually good, and we start building more, right?
Mm.
So without taking risk, without doing this, really not going to go anywhere in this industry. So overall, it's good.
Yeah, I definitely am bullish on DAOs that are maybe outside the U.S. and are not maybe serving U.S. citizens, because what you can do with these different DAOs when you exist outside the regulation of the SEC, it's something that's maybe more free, is you're able to incentivize even further, right? Like if I'll give you a good example, of like Layer1 was able to exist freely, we could even incentivize the amount of tokens that you are earning. So we have maybe a member that earns a ton of LADS tokens, and then maybe we get a certain amount of revenue, and we set 5% revenue aside for people who are LADS holders. So these are all different things that you can do outside the realm of regulation. So definitely an interesting process. We'll touch on this Edgeware BuilDAO here in a second, but I want to touch on this roadmap. It looks like they'll be launching layer 2 tipping bot, so obviously they don't want to be tipping basically not a worthless token, but not very much value inside of that token. They don't want to be using that at a big clip when Ethereum gas prices are so high. They're also talking about rolling out clans, which will be subgroups within the DAO. So definitely trying to build that community out. Again, it will be capped out at 2,000 max members in that DAO. So
yeah, and just to clear up, this karma is not the karma on EOS.
Yeah.
For those people that might be wondering. Also, people are wondering if Polkadot replaced ETH this week. So,
hey man, that's definitely a good. We'll see what happens with the Layer 1 protocols. Those are definitely starting to become more and more of a thing as we move towards kind of the caps and the height of what Ethereum can do. Gas fees are absolutely crazy in the industry. Everyone is complaining about the $5-10 gas fees. I was in a couple Telegram groups that are trying to do games and trying to do micro actions, and it just makes no sense because what they're trying to do is incentivize people to use the game. I'm not going to use it if it costs me $5 every action. So
no, they should go to EOS.
Definitely. Yeah, there's the EOS plug for the day, boys. Shut it down. Shut it down. I guess before we move on to bank custody, we got a couple comments, so let's touch on those really quick because I think they are pertinent, and you touched on that really quick. Pablo saying, LOL, I thought that, but DOT is not fighting ETH. It's compatible. I think that specifically DOT and the fact that Gavin and the team members are from the Ethereum ecosystem, I definitely think that Polkadot has a chance to be that bridge, that more scalable bridge for Ethereum than maybe say an EOS or one of the ones that seem like more competitors and they're at odds with each other. Question from Pablo that I want to touch on real quick. ETH will be the thing, but you need a number 2 contender. Who will it be? Who's it going to be?
No, I don't know, man. I mean, let's look at where we are, right? So it seems like EOS is the one that's like kind of running up, is waiting for somebody to port over, right, from ETH. So EOS has been waiting for the moment like that. So I think if it will be the number 2, I think that's a pretty strong contender there.
Yeah, definitely. I think Polkadot would be probably, other than EOS, and obviously I have an affinity for EOS, other than EOS itself, I would probably say Polkadot's a good example of a number 2 contender. So definitely more that's going on there. As we see layer 2s build out, who knows if Ethereum will ever kind of have to deal with a competitor at all. But we will see. It's definitely an interesting time. Guys, real quick, I want to get you this Curv token. Obviously, we've seen DeFi kind of explode over the last probably month, and even though we've had a pullback, DeFi is kind of still here to stay. Curv is one of the liquidity providers, and I'll pull up DeFi Pulse so that you guys can see this. But Curv has obviously been one of the biggest liquidity providers for the DeFi space. I think they kind of hold somewhere along the lines of, let's see, where's Curv at? 209 million total locked USD. I think one of the pools closed, which is why you see this 20% drop off in total value locked. So obviously pools open and close, and those are the pools that incentivize people to kind of get in at a certain time. So Curv Finance has been one of the biggest liquidity providers in all of DeFi. All of these that you can see on this list, though, have tokens, and Curv does not. Right? You've seen Balancer Token, Synthetics, Compound, Maker, while Curv is coming out with their token this week. This is going to be a token that's going to be initially dropped, and you can check out the guide in the description. This is going to be one of the hottest tokens probably on the market as far as interest goes throughout the crypto community. But basically what you have, guys, is it's going to be initially dropped to people who have already provided liquidity within the Curv Finance pool. So as you can see, CRV will be awarded to Curv liquidity providers. This is This is going to be, I guess they're retroactively going back and doing this. So there won't be any public sale or ICO. All users who have provided liquidity on Curv will be awarded CRV retroactively from day one. This is going to be released late July or early August, so we're coming up onto that. They go through kind of the initial supply, circulating supply, all that good stuff. Utility. So this is being marketed as a governance token for Curv, right? That like what you see with these DAO organizations, if you are incentivized to earn these tokens, you want to be able to have a stake, and that's the whole idea of being able to have a community organization. You have stake, you have say in that community. So they're marketing this as a utility token that's going to allow for governance. What tokens to be listed in the ecosystem, what should the APR, well, I guess APR is set by other metrics, but a couple of other things. But basically this Curv utility will be within the Curv DAO and your stake in that Curv network. So they go on to talk about locking mechanisms, fee burns. So I'm sure there's like some type of situation where you could stake Curv and receive less fees, all of these other incentivization structures. Where can I buy Curv? Curv is probably going to be, like most of these DeFi tokens, going to be on Uniswap. So Uniswap is going to be probably one of the larger dexes that you can pick up this Curv token if you're not already liquidity providing. And then you talk about vesting. So just wanted to get you guys that info. Curv is one of the main liquidity providers for the DeFi ecosystem. They are going to launch their token, and it's going to be worth a good amount. This could debut in the top 50 easily, maybe top 40. Even you could almost say it could debut with $1 billion market cap. So we'll see where it ends up. Curv is that big of a play within the DeFi space. So
yeah, and with that being said, risk disclaimer, guys, nothing is guaranteed, nothing is advice, and so on, right? So as from Dimitri's desk perspective, we're going to talk about, so it's, it's still a risky play, right? So you have to make sure that you do your own research and take a look at the risk parameters and don't throw everything at it, right? If you think it's going to go higher, just maybe take a jab at it and so on. But yeah, interesting stuff to absolutely what Curv is doing, incentivizing liquidity providers, and that's kind of the name of the game with DeFi, right? So it's been going on. So we'll see how that's gonna roll out. There's some.
No. We got some good comments. I think you're about to touch on there. Yeah. Meta's over here saying that Polkadot is going to be more of an interoperability protocol. So that's an interesting take. I saw it as a layer one that was kind of building out its own ecosystem. The Crypto Pickle says, hey, what's up, Crypto Pickle? He's saying, what price will you dump your BTC into alts? 50K, 100K? Yeah, I hope so. Crypto Pickle is saying, eat pizza, watching the pod, can't go wrong. We appreciate you tuning in, man. Leave that like, obviously you're already subscribed. We appreciate our lads here that are in the channel. Dimitri's in there. Meta's saying the Akala sidechain on Polkadot is interesting. It's similar to Maker. Yeah, I haven't looked at that Akala sidechain at all, but Polkadot's certainly building out a bunch of different projects within their ecosystem. The BuilDAO, which we'll get here in a second, is going to be an interesting play. It's going to be within the Polkadot ecosystem, so we'll see exactly, not Polkadot, Edgeware, and we'll see exactly what that means for Polkadot. So Prodigy's also saying, what's up, boys? What's going on, Prodigy? Appreciate you stopping by, man. We're having ourselves a good Monday, and we'll see where we're headed from here.
Yeah, absolutely, man. Crypto Pickle is making me hungry. Now I want pizza. Yeah, cool. So are we ready to move along?
Yeah, we got guys, we got one last discussion piece. We're going to talk banks, custody, and crypto, and then we'll get to Polkadot, EOS, DeFi, and NFTs, as you see. So let's do it.
Yeah. So obviously we've touched on it, right? So banks are now getting green light from regulators where they can custody crypto. It's interesting to kind of just think about it in broad terms, right? So, first when we had Bitcoin created, right, it was the result of financial collapse that happened in 2007, 2008, right? And the reason why, it was created is basically so this way, when the banks collapse, you can have a functioning system to kind of show the ledger that who owns how much of Bitcoin, and maybe perhaps do transactions through that if the financial system did collapse, right? Now, Bitcoin was created and we went through all this stuff where it was kind of decentralized. We have decentralized tools. We have many different tools that are being built. Now we're getting to the point where it's like, well, banks are now going to start providing custody. And the first thing comes in mind, and it was like, well, wait a minute, right? Are we doing this full circle now? Are we coming back into the banks now, right? So we're going to be storing our crypto that was designed in case the banks fail as a hedge against the financial systems breaking down. But now the banks are getting in. So if the crypto is going to flow into that for custody reasons, and if those banks are going to start being under attack again and start doing things where it puts their solvency at risk, then that Bitcoin that you're holding with the banks is not really helping, right? The whole situation in terms of why Bitcoin was created, or why crypto was created, right? And you have to think about it. If banks are getting in on this, well, I'm not sure what the terms are going to be for the custody, but banks love this. They'll say, hey, listen, you can store your coins with us. Meanwhile, in the background, they'll be doing some lending, fractional reserve, and all that stuff where it's like, borrowing, lending, and so on, right? All this stuff to catch some yield there and money, right? They're not going to do this for free. And again, so if you think about that, if we do have like a moment where it's like 2008, where the financial crisis hits and the whole financial system gets put at risk, suddenly everybody's like, well, we have Bitcoin with this bank, but this bank is insolvent and now it's filing bankruptcy, and that Bitcoin that you're holding there is no longer protected, right? The bank can access it probably and take that and use it as part of their bankruptcy, insolvency. So it's like, all these things that is just like, well, wait a minute, you're not gonna get me this time, it's very interesting to see how they're gonna roll this out, because you have to be kind of vigilant when it comes to thinking, all right, what is exactly happening here? There's benefits obviously for the as banks are getting in terms of custody, because you can have more institutional players kind of getting in and having a platform there to work with, like advisors and so on. It puts down this kind of base, right, for everybody to be able to participate within the regulatory requirements. But the negative side kind of it is just like, well, it's kind of the reason why we have this whole thing is just so that in case the banks go down, that we have that protection. But now they're really becoming more and more too big to fail, right? Even trying to grab some of the crypto market share out of that. And it's interesting. There's another article that kind of came out here from let me see, it was The article came out, Coin Metrics. Let me see. It was talking about, a new study from Cornerstone Advisors revealed that 15% of American adults now own some form of cryptocurrency. So, you can see that overall crypto is picking up in US, and on average, they're saying that about $4,000 per person as far as the crypto exposure goes, in that 15%. And then they break it down even further in terms of, all right, who is it, who's kind of, what's the demographics there, right? So it's high income, well educated men, and that, earn 130,000 annually. Some 4 in 10 have master's degree or higher. Then we have the millennials and Gen Xers. Obviously, everybody knew that one. They hold quite a bit of crypto. And then the interesting part about it is like the Bank of America customers. Like, I don't know how that one made it there, but overall, 21% of consumers call Bank of America their primary bank. So it's interesting, to see all of the stats, and you can find that report in the description of the video. But also, another thing I want to mention is that where we fall in terms of percentages against other countries, right? So percentages of consumers holding cryptocurrencies. There's this chart there, and it shows Turkey is number one, Brazil, Colombia, Argentina, South Africa, US, Mexico, China, Indonesia, right? And it's interesting to see, right? So if you take a look at, let's say, like, Turkey, Brazil, Argentina, South Africa, some of these countries, or like, Mexico. So some of these countries are not really doing that well economically, right? Especially in the global economy right now. Their inflation is going up. And people are basically struggling to get away from their current local currency. Some of these countries are setting up restrictions where you can't get into the dollar, right? You can't sell local currency to get into the dollar. So, naturally, they would look for other alternatives like cryptocurrency. So it's interesting to see some of these countries that are on top of US, right, that are struggling economically. More people are picking up crypto as the alternative. And meanwhile, in US, obviously, even though we're printing a lot, but we're not seeing the inflation and, the kind of hardship that other countries are seeing, just because the dollar is the reserve currency. But US is speculating on the fact that those countries that we see here, like, Argentina and so on, that they will continue to buy crypto as an alternative to hedge against the local hardship that they're experiencing in their economy. Therefore, the US is actually just participating that as a speculation vehicle of how the overall global economics is going to change where we are now. So I think in US, people are not as concerned in terms of hedging against the US dollar, kind of falling a lot and causing huge inflation in US, where it's going to cause to the point where it's like, all right, I need to get into cryptocurrencies to hedge some of the risk, or get out of the dollar, so I need to use the cryptocurrency to do that. No, that's not really that. The US is more focused on actually just capitalizing on the fact that other countries are going to need some of those tools, to capture that demand and speculate. I know it just dropped so much, but this is my theory, that I think why certain things are happening this way and why we are where we are now, as far as Bitcoin goes, and as far as, how many people are own cryptocurrency in the US and other countries.
I mean, there's a ton of good information here that you touched on. We've talked stable coins for a long time. Obviously, Bitcoin is another that people can kind of flee into. There's just so much information based on kind of everything that's happening within the broader macro landscape, and how different countries are, finding themselves in tough points, and their citizens are saying, I'm going to opt out of this. I need to get out of this. So there's a couple comments that I do want to get to here that are kind of taking the words out of my mouth. Ola is saying the key point here is that users have a choice. Before Bitcoin, users didn't have a choice. That's fair to say. I think that a lot of people are going to continue to have their assets custodied with big institutions like a Coinbase. They're going to be comfortable with having their bank custody their assets. But to the point that you made, that kind of just continues the cycle. Lending and borrowing is interesting, man, because in order to get that percentage, to your and people are going to continuously seek that yield, not even across DeFi, but across CeFi with Celsius. You have to, literally lend out your assets. So you're losing the control of the asset. Obviously, you're lending it out to try to chase that yield to try to compound your kind of capital. So that is a risk you take when you're lending and borrowing. But I think that, again, going back to Ola's point, now the users have a choice, and it's better than kind of the situation that appeared before, which is that you just have to find another bank, right? To custody your assets.
Yeah, no, absolutely. I think the problem, the users themselves have the choice, but the problem becomes where maybe the financial advisors, the money managers, or some of them that are, regulated and watched, that are forced to utilize custodial solutions, like banks, for example. Those guys don't really have much of a choice. They're going to have to work with banks, right? So those people that are using the financial advisors to get exposure to crypto, to hold crypto, which is going to be a pretty big amount, they're not going to be like getting a ledger, and holding their crypto in their closet, right? That's the capital will pour into those banks using those channels, right? But yeah, at the end of the day, Bitcoin does provide a choice. But I think that just in general, with the banks in the play now, and if we're going to be onboarding more users, we should be ready for the fact that a lot of crypto is probably going to pour into the banks in the US. So
yeah, there's a ton of good information here. I was kind of just trying to get into it in my initial statement, but I got ad blocked. So there's a ton of good information here. You touched on high income, well-educated men, millennials and Gen Xers, Bank of America, but there's a lot of and when it's talking about the next wave of investors, there's a lot of good information here. It said women only make up 22% of cryptocurrency investors. They're going to be accounting for more, obviously, over time. African American, Hispanic consumers, those are going to be large. Younger and older people are definitely going to be getting in, and less educated. So it's definitely interesting to see all of these different statistics based on like people trying to kind of understand crypto, and Scott and I think Ola's talking about it here too. He's saying the job for users that have been in crypto for a long time is to educate people to how to hold their own crypto and not store it on centralized platforms. But I would essentially agree with what you're saying. Now there's going to be a majority of the population that's just going to be comfortable having their funds custody with somebody else, especially if that gets to a certain degree of capital. So
yeah. So yeah, that was a very interesting topic. I'm obviously very passionate about it, considering how much time I spent kind of puking out all my thoughts. But yeah, it'll be interesting to see, obviously how it's going to be regulated. If maybe it's going to be different in terms of, hey, listen, if it's going to be custody with the banks, then it can't be touched at all, can't be used by the banks or whatnot. In case of insolvency of the banks, that crypto is still there and it's yours, right? It can't be touched by any means. So we'll see how that's gonna play out. But looks like that's about it as far as the discussions go.
Yeah, the last thing I'll probably say is we've seen DeFi, and we've seen the people within DeFi kind of chasing the yield. Obviously, those are kind of more knowledgeable users as far as cryptocurrency is concerned, as far as coding is concerned, as far as a lot of things. But what we see with CeFi is they're creating interfaces that allow these non kind of, I wouldn't call them non-educated, but less educated about cryptocurrency. To be honest, like the amount of stuff that you need to do to chase yield in DeFi even kind of confounds a lot of people in crypto. So CeFi is definitely going to be there. I think BlockFi, Celsius are great examples for these people who are trying to chase yield, but they don't want to be maybe using Bank of America when it comes to it. So
yeah. Absolutely.
So definitely, there's a couple other, I think Scott's in the chat. So we got a bunch of guys. Don't be afraid to leave comments, guys. We're touching on this discussion piece. We're going to move to Polkadot here in a second. I got one question for you. What do you think is going to be, besides, like, what's going to be the best piece for lads as we go forward, like the lads token that we've already touched on. You can check it out in the description. What are you most excited about with this lads token launch?
Yeah, so there's many things that I'm excited about, right? So the things that I'm excited about is obviously going to be geared more towards Dimitri's desk. I'm excited that to roll out new things for Dimitri's desk, where perhaps maybe a letter that I'll be doing, kind of like the sentiment analysis before the new week starts and so on, right? Maybe we'll run something where it's like, well, you can ask me to look at 3 different charts of whatever tokens to spend some lads or to, and so on, right? But yeah, Dimitri's desk has got some interesting ideas how I can integrate lads token and how we can have fun with it, to reward you guys. So obviously predictions is fun, but I haven't been doing well on those. So.
Yeah, we'll see going forward. I mean, I think you're pretty bearish there for a second on where the direction of BTC is going. I'm certainly the larger community is happy that we went the other way. But exactly. Definitely looking forward to launching that lads utility. Guys, as far as lads goes, we're launching that competition tonight. The first availability for lads will be winning this competition. We'll choose 2 or 3 people within the community who kind of gave us the best ideas, the most interesting ideas on how we could use the lads token, because we've thought about ways that we could use it, but certainly you guys are smart individuals yourself. So if you guys throw out a good utility for lads, you might win some lads. You might be the first ones to ever get dropped some lads. So we appreciate you guys making it to, I believe, midway through the episode here. I don't know exactly how long we've been going. Probably about 45 minutes here.
No, it looks 30? Like 70 minutes.
70 minutes. God dang. Yeah. All right. Well, we're 70 minutes in. We're going to continue throughout the episode. We got Polkadot. We got EOS, DeFi, and NFTs. So I'm going to move the old column here to Polkadot, and we will move on. So guys, Edgeware is obviously a parachain of Polkadot. If you didn't know about Edgeware, they obviously had that run up over the past 7 days. I think they increased token price about 80% in the last 7 days. Some good things being built out. BuilDAO is one of them. So in obviously we had the DAO discussion here over the last, I would say probably 10-20 minutes that we had in this episode. But essentially what's being happened here with DAOs is the evolution of community incentives and community-based organizations that can incentivize users to participate and then reward them for doing so. So almost like a macro version of what we're doing with lads. There's going to be a DAO that's built out within the Edgeware community to handle investments on Edgeware and Polkadot. So without further ado, BuilDAO, this is the Incubator paper. You guys can look at it in the description, but basically what's happening here is a community run investment DAO. And I would have added this to the discussion, but we had so much discussion pieces. This is going to be a community run investment DAO that's going to take shares via some form of token, correct? And basically what you're going to be able to do is take part in this almost just investment vehicle, right? Where initially, and this kind of leads to the discussion that I want to touch on, initially and throughout kind of the history of venture investing, this has been left up to a small group of individuals. With crypto, you kind of seen the democratization a little bit of venture investing, but this is taking it to the upteenth degree. So basically what you have here, guys, is shares split between Treasury and founders, Commonwealth Labs, who's going to be summoning this DAO, and 7,500 shares for experts and scouts. Now you have all of these different categories of people to kind of break out the different roles within the DAO. Basically, they're going to be using this DAO to invest in projects within Polkadot and Edgeware. And so basically, if I'm getting down to the base value of BuilDAO, it's allowing community members to get involved with actually building out the ecosystem that they're in, right? And getting incentivized for doing so. Now, the incentivizations aren't really like shown out. There's a token economics that I'm going through here real quick that just goes through the distribution, but it's not talking about like what a token holder is able to, other than maybe governance and different things like that, like you see here, sourcing, through voting and things like that. There's not any kind of information as to is this person being monetarily incentivized. But basically, that's the kind of story there. You've got a DAO that's being built out, a community-run investment vehicle on the Edgeware parachain that's going to help fund investing, on both of those chains. So the discussion point I want to have here is these community-run investment DAOs could replace venture capital in the future. Where you've had mostly in the past individuals that are high net worth or are part of these vehicles through whatever relationships they've made and all these things. Certainly they're going to always exist, but what you have here is, and I got to point this out, this DAO is initially going to be funded by Polkadot and the substrate communities itself. So like the bigger overarching foundation. But what you're going to have here in the future is the ability for DAOs to fund projects themselves and bootstrap projects themselves, as opposed to traditional VCs where you have kind of single individuals, maybe larger entities that were traditionally always just funding these. What do you think about that kind of situation playing out?
Yeah, I mean that's a very big goal in replacing VCs. I feel this conversation that we had for many I want to say years almost, like in crypto, where we thought that like, hey, listen, well, the ICOs are going to replace the VCs, well, the DAOs are going to replace VCs, and we really haven't had that kind of materialize just yet. We've seen many experiments kind of being run by using these tools, right? So in concept, yeah, that does sound good, but what is the quality of the people in the organization, in the experience, in the background, in order to pick which project to fund, if that project is going to really benefit the overall network, and all these things. So like from the VC perspective, if you are going with the VC, there's VCs that do they've been in the game for a while. They know how the VC game runs. They have the network. They have the people that basically they can introduce you to strategic partnerships and so on. They incubate a lot of projects, right? They provide a lot of one-on-one mentorship and all these things that are available. So it's interesting when you try to take that whole kind of thing of the VC experience that has been going on in the industry for a while into a DAO. Yeah, it can work, but like, I think, it's like you really need to iron out and make sure that it's going to have the quality there of the community that's going to, pick the projects and fund the right projects, and not like, hey, my friend is trying to do this thing really quick, let's vote for him, and get the funding. And then the project is like, tries to do something, but doesn't really do anything, so it's going to be another experience, I like to entertain the thought, right, about VCs being replaced, or having an alternative. I think that would be a better way.
Yeah.
Just another alternative to it. But it's hard to think of things that turn out to be, as successful as VCs throughout the time, that would say, hey, listen, this is actually already started happening and the move is happening. Right now, I think we're still in that experimental stage. Where we're trying to come up with the best way to do this, and we're still experimenting with this, specific topic that you're talking about, Edgeware. We'll see how that's going to work out. Again, it goes back to the same thing. If it does work out real well, beautiful, right? We got the foundation. Now we can have other DAOs start building on top of it, right? Or taking them as an example of how to do it, right? But it's too early to say that, right? It's too early to say it. We're going to have to see it.
Yeah, I think a lot of this is very pie in the sky still, and the infrastructure is being laid. This is very much like the Bitcoin Citadel type situation, right? Where people that say like, oh, in the future we're all gonna like have these small communities where we're just gonna insulate and be able to pay each other with Bitcoin, and we're just gonna be able to do all these things via community-run like organization without the outside world, right? And that's kind of the situation here that you're talking about. There's a reason why VCs exist. There's a reason why a lot of this stuff is going on. So, I mean, this is, again, back to the initial point. Like, this is going to be an experiment, and I'll get to one point that they made within the article. It says the future of BuilDAO. And guys, if you didn't know about Edgeware before this conversation, Edgeware is essentially they're a governance parachain on Polkadot. So essentially, you could almost say that Edgeware's existence is to facilitate things like BuilDAO. Like that's the reason Edgeware exists. That's kind of their function as a chain, is to control governance first on the Polkadot chain and within their own environment, and then to move governance out to like a bigger role. So obviously Edgeware kind of within their ecosystem creating BuilDAO, that's probably why you saw that initial rise from Edgeware this past 7 days. So I'll read it out here. It says, the future of BuilDAO, as the Edgeware and Polkadot communities are able to show that a DAO can have good investment decisions, a BuilDAO version 2 could be launched to facilitate continuous inflow of investment capital. BuilDAO version 1 is being launched quickly and on existing DAO mechanics like Moloch. However, the largest Moloch DAO is the original Moloch DAO, and they have yet to scale beyond controlling $1 to $2 million worth of capital. So I think a lot of the points that you just made, they kind of touched on there, whereas this is an experiment. If this goes well, maybe we can launch another one. The only other thing I will say before we end this discussion, and I'd love to get people's insight or your guys' insight out there into what you're making of this conversation. A lot of it seems very experimental, very pie in the sky, but can these community bootstrapped projects and bootstrap DAOs, can they be successful? The last thing I'll say is the DAO essentially is investing in different companies at a 50% clip. So you're going to be able to have these different roles within the DAO. You'll have shares. People can earn shares by sourcing projects. Those projects can get $50K worth of investment from the DAO, and then we'll see where it goes. And that's all to kind of facilitate growth within these two chains. So definitely a very abstract discussion. I think talking DAOs is often that way. But I think eventually this will be commonplace to talk community-run organizations that have token incentives built in. Those are always tough discussions. So go ahead.
I was gonna say absolutely. We provide our view right on how we kind of see this thing right now. But you guys that are watching, definitely let us know. Maybe there is a DAO that we don't know about, which is highly unlikely. But if you see success somewhere with some of these DAOs that have been operating real well, drop them, share them, share your opinion about what your thoughts are on this theory, right? So it's we want to make this a two-way conversation. This is the reason why we do these things live.
Absolutely. Great point. All right. So we'll get to EOS here. Not much from the EOS ecosystem. I know there's a ton of EOS people in the community that are interested in what's going on EOS. EOS hasn't seen much of a run up. Maybe Dimitri could touch a little bit on that he doesn't want to give away for Dimitri's desk. Obviously, you can talk more fundamentals here if you'd like. But basically what we have from the EOS community this week is Brendan and Dan joining the discussion on EOS specifically, not EOS.io, as it relates to DeFi. Brendan from a more technical perspective, and then Dan from a more kind of broad philosophical discussion. So that's pretty much it. I mean, Upland, a dApp on EOS, became probably the most used app on EOS. That's the only other thing I can touch on. But as far as these tweets go, here's Brendan saying, today wrapped BTC on EOS can deliver sub-second reliable transactions, low-cost computation, high throughput, programmability through widely known industry standard languages, complementary developer ecosystem, and less reorganization risk for DeFi. So basically what and the reason I have this here talking about this is the community and myself, along with way more prominent members of the EOS community than myself, have asked Dan and Brendan to kind of voice their opinion on what the hell is going on with EOS and DeFi right now. We've seen the growth on EOS. A lot of these platforms would be way more efficient if they kind of took and started building within the protocol that is EOS. What the hell is going on? You guys are just silent. Nothing's happening. So basically, Brendan's come out here with his tweet saying that wrapped BTC would essentially be more efficient on EOS. And this goes into the discussion that we had, I believe, 2 weeks ago, where a company was going to be I remember giving you the story, and you're like, what the hell is going on here? It was a company mining BTC, and you were like, what does this have to do with EOS? Do you remember that partnership?
Yeah.
Yeah, so essentially what they're planning on doing here, if you can read into Brendan's tweets, is wrapping that BTC and being able to move that via the Ethereum or the EOS protocol. So that's kind of a situation that you have there. You had Colin Talks Crypto kind of weighing in here saying we appreciate kind of you specifically talking about EOS and not EOS.io. So this isn't some other sister chain that's being launched to handle this DeFi. This is actually happening on mainnet, and that's been the main kind of source of discussion via the EOS community so far. So good to see Brendan kind of talking about that. Dan took another approach here that we'll touch on. He took the philosophical approach. He definitely, if I had to read into these tweets, he's not a DeFi fan, Dima. So basically he's saying if low interest rates impact society's time preferences to favor consumption over savings, does the same short-sighted mindset cause people not to invest in their future health? So basically what he's saying is people are taking short-sighted approaches with their finances when they're chasing high yield in these DeFi applications. So I think he went on to say how many lives are shortened because of the Fed's and media's focus on consumption today and quick fixes versus going without today so we can have a better tomorrow. Why invest in your future health if your savings cannot sustain you in old age? So there's a ton of different conversations to be had here within these threads if you want to take a look. There's Colin. Again, I'm a big fan of Colin Talks Crypto within EOS, but you could take a look yourself. But basically, that's Brendan coming out and saying, hey, wrapped BTC on EOS makes sense, and that can kind of facilitate growth within EOS as far as DeFi is concerned. And then you had Dan kind of coming out, and there were multiple other tweets that he had that I might be able to get to here from his profile that just talked about philosophically chasing yield in the risky environments that DeFi is in right now isn't the best thing to do. So yeah, not much from the EOS ecosystem this week, but that was some of it.
I mean, I agree with him. I've been talking about the risks of it, right, with DeFi. The thing is, everybody's talking about the bottlenecks, right, in ETH right now, but we haven't really experienced, that systematic issue where, let's say, the volatility picks up and positions have to be unwinded, and then the gas prices are just too high, which is the bottleneck of ETH, right? So everybody's kind of playing the game still. They kind of know the issue is there, but they haven't been affected yet, But if you had that on EOS, with the transaction fees being low, that probably would make it a bit more efficient, maybe easing up that bottleneck, right? So it's interesting to see, right, how the market still continues to go with ETH while there are better platforms and there are examples of the same tools that are catching a lot of attention on ETH. And then EOS comes out with something that it's like, well, hey, listen, we just did this, and it's like so much better, but it's like, here you go, like, you can do this on EOS, and everybody's like, okay, cool, yeah, but we're doing this on ETH, so like we're good, but like, so that's kind of the environment, right? Until like everybody gets kind of wrecked and like, oh wow, you know what? Actually, this ETH thing is like really probably not the best, to run this thing. It got too far where there's so many bottlenecks and it's really not efficient, and a lot of people maybe lost money, and they're like, hey, listen, well, why don't we just do this the proper way now? Hopefully by then everybody's not going to be like, well, DeFi is a scam, and start like, if DeFi space gets tainted with this dark cloud, like, because they were like, well, I lost all this money because I couldn't get out of my positions and all that stuff. Well, it's like, well, yeah, we've been talking about the fact that there are bottlenecks in ETH, and if the unwinding happens, systematic issue to the downside, that can definitely happen, and I think it's good that EOS is kind of doing like all this stuff. It's like, well, here, we just did this stuff and it's kind of more efficient, it's better, and they're hoping that the rotation will happen. We'll see if it does, right? As far as the price of EOS, we're just making our way kind of the back on top of the range of $3, so it hasn't really moved much.
Yeah, I mean, there's a whole another set of discussions to be had on like why EOS price is where it is.
Yeah.
The last, I guess, the last point I'll make is Dan's voice post here that I didn't touch on, but is probably more telling. And I'm going to read from his conclusion here. The masses are attracted to a Ponzi scheme because the returns are high, and they expect they can exit the Ponzi before it collapses. How does one escape a Ponzi economy before it collapses? It cannot be done, and everyone loses. This is why it is imperative that everyone understands financial integrity and then demands it from their institutions. It's every individual's moral responsibility to conduct their affairs with financial integrity and avoid doing business with those supporting systemic fraud. Unfortunately, avoiding the fraudulent system may mean we have to sleep in the barn. So, definitely a hot take from Dan there. I think some would have liked him to see as that's kind of a thinly veiled shot at DeFi. I think some would have liked to see him have more support for DeFi, seeing as it's like moving the markets a little bit. Yeah, that's the last piece I'll touch on for EOS. Not a big week. I think Voice is rolling out their authentication system for signups. It's like a proprietary tool that they're launching for Voice that's going to be used for signups, and it's going to be kind of their obviously IP, and we'll see what they actually launch there. So we got a couple comments to get to. I think I think I'll move this over really quick. We appreciate you guys staying with us here. The last comment I have there, as far as Brendan's comments go, is I heard a comment in the Twitter sphere. Sorry guys, I'm having trouble moving that over. But they're basically saying that basically all the other protocols, all the other layer 1 protocols, can become layer 2 solutions for Bitcoin. You see the wrapped ETH or the wrapped BTC on ETH. Brendan's talking about wrapped BTC on EOS. That's essentially the Lightning Network. Instead of using the Lightning Network on Bitcoin, all of these other layer 1 protocols can become layer 2 solutions for BTC. So interesting stuff. So without further ado, I think we got one more comment. I say Ola Art saying, I know DeFi is the hype, but the bigger deal is Voice. Voice is needed to market EOS projects. I think he's talking about specifically within EOS ecosystem. So yeah, I would agree. Voice being successful is definitely good long term.
Yeah, absolutely. So all right, so yeah, let's if we're ready, let's get into some DeFi. I mean, we've kind of talked about DeFi quite a bit already, right? So the kind of like the last things that we kind of want to mention is what the hell happened to YFI? You know, it's like, dude, like really, this thing went to be priced almost $5,000 per token. Like, what in the world is going on, right? So, you know, for those people that might not be familiar with YFI, it's basically a protocol that or like the algorithm that basically allows you to, let's say, put in like your stable coin, and then the algo puts your capital into the most yielding assets, like between Maker, Aave, like Land, and other DeFi projects that they're doing, like all these farming and so on, right? With interest rates. So it automatically basically shifts you between which one is the highest yielding. And then if that changes, it switches to the other one. So it's an aggregate, basically, a system that allows your capital to maximize returns by chasing the yield and whichever DeFi project offers the most kind of set up there. It's similar to, we've talked about it before we started the show, is a similar kind of how Staked is doing things with proof of stake setup, where they have an algo where it will rotate your capital based on the yield that people receive for staking tokens on networks. So it's automatic and it can switch quickly and so on, right? So this is the same type of setup. So, it seems legit, right? At first glance, like, wow, like it's cool. I don't have to really do this manually, right? You can have this automatic, you can just chase the yield and so on, right? So this token, basically, the reason why, first of all, it opened up around like $700. The reason why it's got priced so high is because obviously everyone wanted to use that system, but also at the same time, the supply, the availability of these tokens was very, very low. Meaning that,
100% pre-mined as well.
yeah, 100% premium. What was the total supply? It's like 2,000 tokens
It
or
was
something.
very, very small. And
It was ridiculous, right? It's so small, right? And then that makes sense, right? It was just like, well, if you make this very scarce, token supply, then if the demand is going to be there, then it will be pushed that high, right? So we went up for the token price. It went up like almost 500%. Now it came down about 50% down, but just you got to be careful with these things, guys. Like,
yeah,
volatility is going to be there, and people are going to do creative stuff where you can see numbers on the screen. We're like, wow, well, this thing is like $5,000, but you don't really understand. Well, it's actually the token economics that has to do with the fact why it's priced that way. So.
yeah, there's a lot of narratives here that I think, going back to, I think Ola talked about it here, or it might have been someone else, but basically they were saying that more experienced investors and people that have their kind of finger on the pulse of the markets are able to form the narrative and then get people to FOMO buy in, right?
Mm-hmm.
And what's better to FOMO buy in than something that has 2,000 tokens worth? So there's a ton of narratives going on here. Andre Cronje, I don't know if I'm saying that right. This was the developer who by himself created this. And basically, he launched this software. I think he even has a disclaimer that's pinned to his seat. So he said, "When I build software, I build it for myself. If you insist on interacting with it, please use caution." There's definitely some other things that he goes on and talks about. This was just put out to the world. I don't even know exactly what supply he kept. So there's this whole narrative around like Bitcoin Jesus, essentially, where he's like able to create this software, push it out, almost like Satoshi did with Bitcoin, and it's out to the community. And there's, again, going back to DAOs, there's going to be a DAO surrounding this where the more tokens you have, you can determine what happens with the total token supply. Is it going to inflate? Is it going to decrease? Are there going to be burns? And then all of this kind of narrative where the guy just released it 100% pre-mined to the community. There's the features that you talked about, the utility of it, where it's able to shift around. This all kind of loaded itself up, and you saw that like that. I mean, it went like 5,000%.
Yeah.
Like within the course of like 2 days.
Yeah, it's it's an outcome of our industry where we have most of the stuff where it's like open source, right? People that have legitimate good intentions. They're like, listen, I'm using this thing. Like, here, I'm gonna put it out to people. Since it's open source, right? Everybody can like, oh, cool. I can actually make this probably like attached to a token and so on, right? And make it into something different, right? So maybe that happened, right? So we don't really know, but it seems like the guy's, saying that, hey, listen, I've just made this as a personal tool for myself.
Yep.
But if you guys want to use it, here you go. Like, but there's really I bet he didn't really have intentions to do it with the token like that, right? So it's something that happened in the background there that caused it. So.
Yeah, and I've got the CoinGecko chart up here now. It says looks like July 18th the token was minted or was distributed in whatever way it was, and we have a YouTube, like a 3-minute YouTube explainer to explain this in a much better way than we can from one of the members of their community. $52 on July 18th, and I think it peaked out July 25th at 30. Oof, I can't. $4,500 it peaked out at.
Jesus, where was I?
Yeah, exactly. So I mean, it pays to be knowledgeable about certain sectors that are outside of maybe regulation or outside kind of the access to people who can control the markets, right? You've talked about market making, and you've talked about a lot of the bigger players who, once they're in, there's and certainly there's other macro factors that drive Bitcoin up 10%, but you can see these 5,000, 500, all of these big gains when you get to lower market caps, and like the bigger players just aren't there. And there's not a lot of, I don't know if you can touch on this, but just there's a benefit to understanding the markets where bigger players can't interact because they just don't. Like they've got millions of dollars that they got to look at. They're not going to drive the market up 50% trying to buy this shit on Uniswap.
Yeah, no, absolutely. There's so something like that, which has a lower market cap, also has lower penetration as far as the liquidity goes. So meaning
Hmm.
that I can have smaller amount of capital and be able to move the price, in that sense. Um, so yeah, somebody who's bigger is not going to be looking at the smaller market cap because the liquidity is not available there to get in and out efficiently. So this type of stuff, it offers an opportunity for somebody with lower amount of capital to be able to do this, right? So
Hmm.
that's kind of like the idea behind it. Honestly, as far as the regulations go, like regulators really start looking at this and taking an aggressive approach once a lot of people get hurt, right? So
Hmm.
we haven't really had that yet, and I hope we don't. But if it does happen, then um, eh, regulators are going to crack down on this hard, right?
Yeah, I mean that goes along with the narrative that a lot of people are playing with, in that it's better a DeFi and the projects that are being built there are better than the ICO projects because it's not vaporware. I
Right,
think you made that point, correct?
right, right.
Like it basically does exist as a project, so no one can go back to it and say I invested into something that is a scam,
Right.
essentially.
So we're moving forward, like as an industry, right? We're getting better.
It remind.
Eventually,
Go ahead.
eventually we'll get there.
It does. When somebody says that, it reminds me of me, like saying like how can I explain this correctly? It's like people in the DeFi space are kind of pointing at ICOs and saying we're better than that. And it's like,
Yeah.
well, that's not the biggest bar you're setting, the highest
Right. Yeah.
bar you're
Yeah.
setting for like being better than. So,
Yeah.
guys, it's been a great episode here. We have a little bit left to get to. Do you have anything left for DeFi
Yeah.
that you
Just
wanted to hit? Okay.
yeah. Last piece I wanted to hit for DeFi is just there was a piece that came out actually on the 24th of July. It's four of South Korean biggest banks to provide data for DeFi platforms. So basically, four biggest South Korean banks are going to be working with Chainlink oracles to be able to provide pricing in terms of the conversions from their South Korean currency to the dollar. They're basically using some of the DeFi tools there. Uh, well, with these big banks to just provide the quotes and the data. So it's interesting to see that collaboration there. Where we have major banks, especially in that side of the world, are happening utilizing some of the technology that Chainlink is building with oracles, because eventually we'll see more of a hybrid setup there. As far as DeFi goes, and all these oracles, where they will work with some of the centralized banks, and so on, right? So it's pretty interesting to see that happening in South Korea. We'll see how that's going to work out. Obviously, it's again, this is not for crypto. This is straight for currency data pricing for South Korean local currency to the dollar, which actually during this time is probably a very very important data, and oracles are probably very much needed there. So yeah, that's pretty much it for DeFi. Let's hop
Awesome.
into some NFTs.
Yeah, I'm gonna touch on NFTs real quick, Scott. He's saying thanks for the show, Jen. Scott, we appreciate you guys. We appreciate all of you that are in the channel still and following us along on Layer1Live. I'm gonna make this real quick, guys. We got three pieces of NFT news. One comes from the NFT art space. It looks like a Picasso Bitcoin bull. So a famous painting is being digitized, and they were able to sell different NFTs worth of this Bitcoin bull. It looks like the original animation went for 55 G's on this marketplace. 3 out of 3 for a gold version, 10 out of 10 for a silver, and then 25 out of 25 as far as the mint goes went for $200. So good to see the NFT marketplace kind of continue to develop. 55K is not a small lump sum. So we'll continue to see those physical artworks being digitized as NFTs and sold. Definitely helps the artist too if you can sell two versions of one painting. The Sandbox is another piece of news really quick, guys. Sandbox is holding their sale A lot of these NFT pieces of news I go over on NFT Live on Thursdays, so you might have heard me talk about this, but they're holding their final pre-sale, which will be broken up into 4 parts. The main portion that you want to be concerned about here, if you are an NFT investor and enthusiast, is that these investments in these final pre-sales are going to net you not only the land, but premium assets. I think they're trying to incentivize people to take part in this last pre-sale. It's certainly been a long time. I think it's been like 6 months that they've been running these sales. So they're trying to continue the hype. So you'll be able to not only invest in the land at this portion, but you'll get premium assets on top of that. You can check out that link. And then the last thing, guys, is DeFi processes are headed to NFTs. It looks like Rarible introduced their incentivized liquidity token. So basically, Rarible is another kind of OpenSea competitor there. Anytime you're now trading on Rarible, you're able to receive this Rari token that you can then sell on Uniswap or on some of these decentralized exchanges. Let me see if I can pull it up. All right, so it says introducing Rari, the first governance token in the NFT space. So they're modeling this as a governance token. Again, how many times can we talk about governance on one episode? But you're able to get this Rari via kind of trading on Rarible. So if I trade, any asset for any asset or buy an asset, I'm able to get Rari in that place. And then I'm able to use that token to participate on the Rari platform. So we touch on DAOs enough. I'm not going to go into that or the incentivized ways that you can earn it. But it just shows kind of this DAO structure being built out. So I don't want to. I think we've hit the clap on a number of times. You can actually say that word in an episode. So did you have anything based on those 3 stories that I hit?
Yeah, when are they gonna have lending and borrowing for real estate in Sandbox? That would be super interesting.
That would be interesting. I mean, I guess they have to launch the damn platform first.
Yeah,
so.
That's true. Yeah.
So yeah, that should be interesting as we go. I think they're planning on launching end of 2020. It looks like FPW is saying, "Hey guys, make a show about Polkadot." Yeah, I mean that's going to be something that we can continuously bring you info on as the mainnet. I think mainnet went live, I think, in the past month. So we'll definitely be adding more Polkadot information to our episode here. As you can see, Polkadot took Ethereum's spot today, so it's on its way.
Yeah, absolutely. And we had an interview with one of their members as well. If we do have enough interest from our community, we'll be happy to reach out back to them and see, get them on the show again, see what the updates are there. Give you kind of the information straight from them, right?
Definitely. And I think we do have Dylan Chen. I was talking with Dylan Chen from Edgeware. He's one of the founders of Edgeware, one of those Polkadot parachains. They're going to come on in the next 2 weeks, so you should see Dylan Chen here on the platform within the next 2 weeks. So that will be interesting. If we could get Gavin Wood on this podcast, God damn it, we would. So we're definitely trying as we see the Polkadot ecosystem kind of launch. So we appreciate all of that. Thanks for the comment, FB. You got anything else, man, before we head off?
No, man. I'm gonna hit my cocktail stand behind me here in a bit and enjoy my Sunday. Probably look at some charts and
make some money.
Yeah, exactly. So tomorrow, Dimitri's desk, 5 p.m. Eastern. That's coming up. So for those guys that are looking to, learn the trading side of things, this is what we discuss. We take a look at technicals, especially with volatility right now. A lot of people might be wondering, is this the top, right? Nobody wants to buy them. The top, right? So we're going to run through a lot of bags as far as the alts go. We're going to talk a lot about BTC and all that good stuff. So 5 p.m. Eastern tomorrow. Catch me there doing a live session.
Boom. I'll be there, man. I'll be there checking out that content. Guys, we got some final comments here. Scott saying he's headed to the rifle range definitely have yourself a good time at the rifle range. Let us know what you're working with there, Scott. The last thing we'll say before we end the episode here, guys, is we are launching that first Lads airdrop where we launched our token. Obviously, we've talked all about it. We're launching the first competition tonight. So keep an eye out in the Telegram group as well as Twitter, and then we'll make sure that you guys know more about that competition, and we will launch it today. Please leave likes. It definitely helps us as we continue to grow out the channel. You guys are awesome, and that will be it.
Boom.